Hello, all. Good evening and welcome. I'm Mamta Rawat from the Corporate Communications team of CareEdge. I welcome you to our discussion today on Indian roads. Monetization outpaces sector headwinds. We sincerely appreciate your taking the time to join us for this webinar. We would like to welcome our esteemed guest speakers for today. Mr. Gaurav Chaturvedi, Chief Financial Officer at Walter Infra Manager Private Limited. Mr. Rajesh Garg, Managing Director at Kalyan Toll Infrastructure Limited. Mr. Satyan Kumar, Head of Project Finance and Treasury at Sekura Indian Management Limited. Mr. Taluri Raghupati Rao, Whole-Time Director at PNC Infratech Limited. This session will be moderated by Mr. Maulish Desai, Director at CareEdge Ratings. We will commence this session with a presentation by Setu Gajjar, Associate Director, and Sakina Hussain, Analyst at CareEdge Ratings. This will be followed by a panel discussion and a Q&A session. In case of queries, participants are requested to key in their panel. We will take up your queries at the end of the discussion. Now, may I invite Setu to make the presentation?
Yeah. Thank you, Mamta. Good evening and a warm welcome to everyone to CareEdge Ratings webinar on Indian roads, monetization outpaces sector headwinds. We shall now commence the presentation with the key messages. The road sector is navigating through a challenging environment marked by muted central capex, execution delays, and rising competitive intensity. State projects will continue to drive the capital outlay. NH pace of construction is expected to decline further by 9 to 10% during FY26 over FY25. Also, toll growth for FY26 is pegged at around 7%. Outlook for the sector is stable for the toll roads. Execution woes and competitive intensity continues in NHAI projects. Also, however, the impact of MOT's recent steps taken to curb the bidding aggression is likely to be moderate. Working capital intensity has led to an increase of around 75 days in FY26 over FY24 for the road developers. Also, the operating margins are expected to moderate by around 75 basis points. HAM asset monetization potential of over 2 lakh crore is there for the next 3 years, that is FY26 for FY28. However, valuations and investor appetite remains a key monitorable. Moving on, for our agenda for the day, our discussion today will cover the investment trends in the road sector, outlook on NH toll roads, assessment of NH HAM projects, impact assessment on operational and financial performance of the sponsors, and asset monetization momentum as well as future potential. Beginning with the investment trends in the road sector. As seen on the left side of the slide, since FY17, the sector has seen a cumulative investment of around 28.5 lakh crores, both by the central and the state government, registering a compounded annual growth rate, that is CAGR of 13%. However, with muted project awarding and execution over FY24 and FY25, the investment from center has remained largely stagnant. With further expected slowdown in the pace of construction of national highways, central capex outlay is expected to remain muted despite higher land acquisition costs. Looking at the state capex on road sector on the right-hand side, the same has gained momentum over the years, corroborated from a 15% CAGR of capital outlay over FY21 to FY25. Uttar Pradesh, Maharashtra, Tamil Nadu, Gujarat, Rajasthan, and Odisha are the key states with huge capital outlay for roads in these years. For FY26 and FY27, capital outlay growth from state is expected to outperform the growth from center given the strong pipeline and execution. This trend reflects the growing importance of regional connectivity and state-level infrastructure priorities. Moving on to award and execution trends for national highways. In lines with CareEdge Ratings' earlier estimate, the pace of national highway construction declined from 34 km per day in FY24 to 29 km per day in FY25. CareEdge Ratings expects a further decline in the pace of construction of national highways by 9 to 10% to 26 km per day in FY26, which shall be the lowest since FY19. It is primarily due to lower awarding activity, execution hurdles, and prolonged delay in the receipt of appointed date owing to issues in land acquisition. Looking at the trend of project awarding since FY23, the project awards have steeply declined from 12,375 kilometers to 4,874 kilometers in 11-month FY25. To address these issues, the Ministry of Road Transport and Highways has identified a strong pipeline for project awarding with target of 10,000 kilometers for FY26. Nevertheless, awarding activity continues to remain subdued in current year till mid of December 2025. Going forward, traction in project awarding and subsequent execution peak are the key sector monitorables. Next, we will discuss the study of around 100 operational toll roads. After witnessing a double-digit growth in toll collection over the years FY22 to FY24, the growth has moderated to 6% in FY25. This is primarily on account of lower inflation indices and impact of alternate route on some of the stretches. Going forward, CareEdge Ratings expect the toll collection to grow by around 7% year-on-year basis during FY26. Increased economic activity, ramp up in domestic coal production, and improved connectivity on feeder routes are the key accelerators for the sector. Furthermore, reduced threshold and increased frequency for revenue testing for TOT projects is also a welcome move for bolstering investor confidence. However, traffic cannibalization from greenfield expressways and the expected modal shift from roads to rail and regulatory risk associated with the state toll projects are key speed breakers. Wide deviation in calculation of target traffic between NHAI and developers is a key concern for timely extension of concession period. Nevertheless, the outlook for the sector remains stable. To boost the passenger traffic, MOTH has introduced annual FASTag pass for non-commercial vehicles, which is a notable development. A study of over 300 toll plazas showed an adoption rate of around 13% during the first 2.5 months of implementation. However, the impact is envisaged to remain credit neutral thanks to the fair compensation framework under change in law and timely reimbursement mechanisms in place. We shall now present a study on the NHAM projects. CareEdge Ratings has studied 374 NHAI HAM projects with an aggregate length of 16,000 kilometers and a total bid project cost of over 4 lakh crores. As shown on the top right chart, around 42% of the sample BPC, aggregating to 1.65 lakh crores, have become operational, approximately 45% are under construction, and remaining 13% are awaiting appointed date. Moving to the under construction portfolio of 1.83 lakh crores. Project with a bid project cost of over 40,000 crores as of March 2025 have been awaiting appointed date for more than a year since being awarded. Increased focus on greenfield expressways and highways and consequent challenges towards land acquisition is the prominent reason for the prolonged delay in the receipt of appointed date. Analyzing the under construction category representing 45% of the sample size. As we can see on the right hand side of the slide, 55% of the projects with an aggregate BPC of over 1 lakh crores are delayed by more than 6 months. It is important to note that the delayed projects span across all sponsor categories. Uniform construction period of 2 years, irrespective of project complexities, and non-availability of hindrance-free right-of-way are the prominent reasons for the delays. After looking at the execution challenges, let us have a glance at the competitive intensity in the NHAI HAM projects. As shown in the graph on the left-hand side, aggressive bidding in the NH HAM projects across sponsor categories has steadily reduced the bidding premium compared to NHAI cost, with the median premium being negative during FY24 and FY25. Competitive intensity continued to remain high for EPC projects as well. To address the aggressive bidding, MOTH has introduced number one, stricter qualification criteria, and number two, requirement of additional performance securities. While the said measure for additional performance security aims to curb bidding aggression, its effectiveness may be limited due to release of performance security upon achievement of 30% physical progress and availability of unutilized non-fund based limit with large players. MOTH has also tightened the bidding criteria while introducing adjusted net worth for bidding of the new projects. Accordingly, 20% of the unexecuted order book in the public-private partnership, that is PPP projects, shall be excluded for calculating net worth for bidding eligibility purpose. This modification is expected to eliminate small to moderate sized players having large portfolio of under construction HAM projects and hence is a welcome move. Now, I'll hand over to my colleague Sakina to take forward the presentation. Over to you, Sakina.
Thank you. Moving to impact assessment of execution woes and lower awarding on developers' operational and financial performance. With slowdown in awarding in NH projects and intensified competition in the sector as seen earlier, majority of the road developers have diversified into other allied construction sectors. CareEdge Ratings has undertaken a study on 30 developers which showed that while order book to turnover ratio has remained stable, the composition of order book has undergone a significant shift. As seen on the left side, share of roads projects reduced from 75% of the order book in FY23 to 64% of order book in FY25. Furthermore, with central capex witnessing stagnation, the share of state projects has shot up from 8% during FY23 to almost 35% during FY25 and is expected to increase in the near term. This exposes the developers to heightened project execution and counterparty risk. Digging deeper, CareEdge Ratings has analyzed financials of 23 developers. As earlier envisaged, with subdued project awarding and execution challenges, total operating income declined by 7% during FY25 over FY24. Furthermore, significant orders in the order book are awaiting appointed date, resulting in a much lower executable order book, moderating revenue visibility for the road developers. Going forward, CareEdge Ratings estimates aggregate turnover to remain stagnant for FY26. PBLDT margins steadily declined from 12.97% in FY23 to 12.24% in FY25 and expected to decline further by 70 to 75 basis points during FY26, owing to intensified competition, change in order book mix, and lower absorption of fixed costs. Moving on, let's take a look at working capital intensity and leverage profile of sponsors. Looking at the working capital intensity as seen on the right side of the slide, gross current asset days for majority of the sponsors for FY23 and FY24 have remained around 180 days, primarily due to release of monthly payment instead of milestone achieved under Atmanirbhar Bharat scheme introduced during COVID-19 to provide respite to contractors. With the discontinuation of the scheme and change in order book composition, gross current asset days for major developers have increased by almost 50 days during FY25. CareEdge Ratings estimates gross current asset days to further elongate to 250 days during FY26, primarily due to foray in other construction sectors and rising share of state projects. Increased working capital intensity has led to higher debt levels, which coupled with lower operating profitability during the year. This has led to deterioration in leverage in FY25. CareEdge rating envisages the same to further increase to around 3 times in FY26. However, sponsors with a pool of operational assets are expected to be better placed to manage their leverage and liquidity. With this, we conclude our HAM study and its impact analysis on road sponsors. Moving to the last section, asset monetization. Despite sector headwinds, asset monetization continues to outpace challenges. Asset monetization under the National Monetization Pipeline has gained significant traction, driven by strong investor appetite, leading to successful asset transfers and higher realizations. During FY24 and FY25, the transfer of toll assets under NHAI InvIT and the traction in TOT projects have facilitated the monetization of close to 93,000 crores. With a robust monetization pipeline for 2026 to 2030 and an established InvIT vehicle, the monetization potential, especially for NH toll assets, remains strong. InvITs have proven to be a successful vehicle for asset monetization, providing investors with relatively stable returns. InvITs have added over 90 assets over the last 2 years, as shown on the left-hand side of the slide, primarily driven by HAM projects at 47 assets, followed by toll at 38 assets. Roads InvIT asset under management is projected to grow by 37% to 3.26 lakh crore by FY26, making roads the most popular asset class. Traction in monetization of HAM assets, benefits of asset monetization through TOT and NHAI InvIT, and change in hands for some toll roads are prominent reasons for the same. Over the past years, out of the operational pool of HAM assets of 2 lakh crore, assets worth over 1 lakh crore have already been monetized, enabling various sponsors to realize approximately 19,750 crore from the stake sale of 80 HAM assets. Monetization potential from the existing operational HAM assets stands at rupees 50,000 crore. Moreover, HAM assets worth 1.5 lakh crore are expected to be operational over FY26 to FY28. Therefore, monetization potential remains robust at 2 lakh crores over FY26 to FY28. However, CareEdge rating expects valuation upside to be limited due to higher leverage and competitive bidding during award periods as mentioned on the right side. Also, peak bank rates and lower price index multiples may limit valuation prospects as compared to 1.75 to 2 times of investment multiple observed in the erstwhile monetized projects. Nevertheless, perceived risk is in quality of construction and valuation multiples are key challenges going ahead. With this, we end our presentation. Thank you. Handing over to Mamta.
Thank you, Setu and Sakina. Attendees are requested to key in their questions, which we will take up after our panel discussion. Now, may I invite Molish Desai to take over the session, please? Molish Desai is the director and ratings head at CareEdge Ratings for the transportation sector and handles the portfolio of infrastructure sector companies. He holds a bachelor's degree in engineering, MBA in finance, and CWA. He is also an associate member of ICWAI and a certified associate of the Indian Institute of Bankers. He has more than 18 years of experience, industry experience, including 15.5 years with CareEdge Ratings. Over to you, Molish.
Thank you, Mamta, for the quick introduction, and many thanks to Setu and Sakina for wonderful tech presentation. Good evening and very warm welcome to all participants. My request you all to turn on your video. It is said that the most transformative ideas don't happen in isolation. They are born when minds meet and conversation flow. It is our pleasure to have four industry experts today for conversation to discuss threadbare on the road sector and share their deep insights before us. I would now like to introduce each one of them in the alphabetical order. First is Mr. Gaurav Chaturvedi. Gaurav is chartered accountant with vast experience in the infrastructure sector, particularly in raising of debt and equity. Gaurav has over 20 years of experience with background in infrastructure projects and M&A transactions. He has worked with organizations like L&T and HSBC and also played a role in establishing Enterprise Invit. Gaurav is currently associated with Actis Group, where he serves as a Chief Financial Officer of Walter Infra Manager Private Limited, which is an investment manager of Next Infra Trust. Welcome, Mr. Gaurav. Our next panelist is Mr. Rajesh Garg. Mr. Rajesh Garg is Managing Director of Kalyan Toll Infrastructure Limited, which manages an operational pool of over 25 PPP assets, including toll, HAM, and annuity across geographies. He has over 35 years of experience in project management, business strategy, execution, and financial planning in the infrastructure sector and spearheads the Kalyan Group. He is also actively involved in various social activities undertaken by Kalyan Group. राजेश जी आपका भी हार्दिक स्वागत है आज की चर्चा में. नमस्ते सर. Our next speaker is Mr. Satyan Kumar. Mr. Satyan is heading project finance and treasury at Sakura India Management Limited, and he is a core member of the team driving project acquisition and financing. He brings with him over 25 years of experience in leadership role, handling debt syndication, corporate credit, structured finance across banks, NBFC, and corporates. Over the last 15 years, he has worked extensively in renewable energy, roads, and transmission. Prior to Sakura, he also held senior roles in banks and financial institutions. He has been instrumental in fundraising for Energy Invit and also proposed Transport Invit under EAAA infrastructure strategy. Warm welcome, Mr. Satyan. And our fourth speaker is Mr. T.R. Rao. Mr. Rao has over 3 decades of experience in transport and urban infrastructure development. Mr. Rao is a technocrat and holds a degree in civil engineering and postgraduate degree in planning as well as construction management. He serves as a whole-time director of PNC, whole-time director at a PNC Infratech Limited, where he oversees business development, project implementation, contract administration, and operations across varied PPP projects. Mr. Rao has a deep experience in PPP project structuring and has previously held senior roles in various financial institutions. Very warm welcome, Rao, sir, in today's session.
Thank you. Thank you so much, sir.
So it's time to quickly set the context before we begin the panel discussion. Indian road sector is facing headwinds for last 2 years, as also reflected in the presentation, with decline in both pace of award as well as the construction for national highways, besides intensified competition. This is also expected to impact the operational and financial performance of the developers, lacking a pool of operational assets. Nevertheless, healthy capital outlay from states and a strong pace of asset monetizations are key positive from the sector perspective. Will this monetization pace continue to offset sector headwinds? I would not like to impose myself further on this and turn towards our speakers to tell us how they think this will work out. So let me request Mr. Rao to share his views first. Sir, what's your experience and what's your take on slow pace of awarding for last 2.5 years? And how do you see achievability of targeting awarding of 10,000 kilometer for FY26?
Thank you for kind introduction, and I really appreciate the presentations made by your team members. It's a wonderful presentation and the
Thank you,
deep
sir.
insights. A lot of homework, a lot of research done by you. It reflects in the presentation. So I really appreciate and congratulate. See, it's a fact. Everybody knows last 2.5 years, the awarding activity is subdued, which is not expected. So though we know the sector is cyclical, but we, as a developer, as a construction company, we never expected that this kind of decline in the awarding activity, this kind of a thing. Okay, we expected something in 2024 because of the general elections. Then they stopped the Bharatmala. They put pause on the Bharatmala program and all. But we thought that okay, they'll be there at least 75 to 80% of the awarding activity what they targeted. But it has come down very low. As far as this year is concerned, more than 4,000 crores, 4,000 route kilometers they awarded out of 10,000, very less during the period. I would say almost December, if you count it, it's a 9 months. But one thing, good thing is that NHA came out with a list of 52 farm projects, 52 list with a more than 90% with the bid due dates for a total value of 115,000 crores worth of projects, comprising four BOT major projects in Maharashtra and one in Andhra, and 19 EPC projects and 29 HAM projects. The total estimated cost of these projects is 115,000, 1.15 lakh crores. What they say, as per our discussions with NHA, because we are executing a lot of projects for NHA, so we keep discussing with them on a regular basis. They say they're confident of awarding these projects before end of the current financial year. So these projects will have a total 2,188 kilometers. Plus, if some projects by MOTH and NHADCL, if you put another 1,000 kilometers by them to put together, so total we are expecting around 3,000 route kilometers of new projects would be awarded. We are hoping for that, which adds to 7,000, means it is a 70% of this thing. But what will happen if awarding though these projects these projects will get awarded during the next 3 months, but the impact, positive impact of this thing will come only in the next financial year, even later than that. Because in case of what will happen, in case of EPC projects, what we typically gestation period is very less. We execute the agreement and then we start physical execution of the project. Whereas in case of HAM and BOT, it takes time because at least 5 to 6 months for the financial closure and other thing, execution and so it will take time. So there is even if they award by the end of this thing, only it will FY28 only you will get the project this thing, and also the visibility in the top line of the companies. So there is certainly it's a setback to the whole industry, because what happens, see, we have been in the road sector, and of course we are also into airports, runways. We have prepared this thing, but both are in a similar kind of execution thing. If you see runways and all, there is no much difference in the items and all. So as a company, we have a people of more than 10,000 employees, and also we have a gross block of around 1,300 crores of this thing. These are all oriented, these are all meant for road construction. Even if you go for a even diversification of these things, so we need to recruit the people who have to take care for other vertical heads, for other kind of a thing, and also then the equipment and other things that would be needed for these diversified sectors. So even as you know, many, as you said, mentioned in the presentation, and also you all know, so we have started diversifying the major road, the developers, we are diversifying into other sector because there is a cutthroat competition, very unhealthy competition
Yeah.
in the road sector, and also there's subdued activity in the awarding thing. So we are hopeful. So with the kind of thing assurance we are getting from NHA saying that more than 1 lakh crores worth of projects will be awarded. And the second thing is we are also expecting there is some kind of a moderation in the intense competition because of the reduced net worth kind of thing. The criteria what they have put,
Yeah.
20% net worth of the whatever the unexecuted portion of the thing, and also then we need to have a 20% for the new projects what we are bidding. If I want to bid for a 20,000 crore project, I need to have a 4,000 crores kind of a net worth. So very few people, few companies are having that kind of a net worth. So which is having a, so this will also have a positive net worth, and the competition will be more healthy, and we expect some kind of a awarding activity. Otherwise, this thing,
Well articulated.
even see, if you see a client perspective, one is they want to ensure because the projects which already have been awarded, also execution getting delayed because of the land acquisition, and also there is gaps in the DPR and other things. So from NHA perspective or from MOTH perspective, they want to ensure the availability of land of a minimum length so that they'll not enter into problems, delay in declaration of appointed dates and other contractual issues, and later into a dispute kind of a thing. So they also slow down, and also the increase in the land cost because with the 400% of solution and this thing, and our land costs have increased, and the most of the states have they increased the circle rates. So with the
Mm.
kind of a circle rate and the 400% of this thing, and somewhere they declare the from rural lands to urban land kind of a thing. So it's all the cost of land has also increased. And the second thing is there's a gaps in thing, and also they're in a certain dilemma whether they should go for a ham or they should go for a BOT, or they should continue with the EPC. BOT again, as you know, now they're still discussing on the finalization of the new concession agreement. That's why those BOT projects which they launched more than a year ago, so they've
Mm.
not come out with the firm bidding date. Thank you.
Sir. Yeah. Yeah, sir. So well articulated, sir. So what the big message which I can gather from you is that the authority is working in the right direction for improving the pace of awarding. However, because of the muted awarding, the pace of construction is expected to remain low even in FY26 as well as 27, and the uptick can happen or continue upon this awarding by March 26. And you are expecting around 7,000 kilometer of awarding
Yeah.
by March in FY26, which is a 70% of the target. So yeah, it's a quite encouraging from the current level. So thank you, sir. So my next question is to Mr. Garg on the competitive intensity. So we have discussed in the presentation, and Mr. Rao has also mentioned that the competitive intensity has increased in the sector, and MORTH has taken various steps, as also articulated by Mr. Rao, to introduce the concept of adjusted net worth. The 20% of the invested amount in the PPP projects would be reduced to calculating the net worth for bidding criteria perspective. So, what is your view on continuing bidding aggression in the HAM projects? And what do you think about the authority steps? Is it effective and adequate? Garg sir? सर यू आर ऑन म्यूट सर, आप म्यूट पर हैं. हाँ. हाँ जी सर.
पहले सबको बहुत बहुत थैंक्स सर, मुझे इनविटेशन के लिए सर, और बड़ा अच्छा आपका प्रेजेंटेशन चल रहा है सर. सर ये जो अभी चेंज कर रहे हैं सर नेटवर्क में, और जो इनने करा है कि 20% सर, अच्छी एक सिंबल है सर बिजनेस के लिए कि कंपटीशन में भी कम होना चाहिए सर इससे, क्योंकि अभी आज जो कंपटीशन हो रहा है सर वो इतना ज्यादा लो हो गया है सर कि जो अच्छी कंपनियां हैं, जो भी बढ़िया जो काम करने वाली कंपनियां हैं, वो कहीं ना कहीं पिक्चर में नहीं रह गई हैं सर अभी हाल, है ना. वो कॉम्पीट ही नहीं कर पा रही हैं सर, और वो शायद दूसरे सेक्टरों में अपना बिजनेस को ढूंढ रही है सर. और अगर ये चीजें होती है सर कि 20% पे रहती है तो शायद थोड़ा बेटर होगा सर। अभी अभी हमने सुना है सर कि शायद कुछ रेटिंग भी डिसाइड कर रही है सर एनएचआई कि कुछ कंपनी
ट्रिपल बी रेटिंग दे हैव डिसाइडेड
ने
फॉर।
ट्रिपल बी के अलावा कुछ कंपनियों की इंडिविजुअल रेटिंग भी करना चाह रही हैं वो, कि जिनके इंडिविजुअल रेटिंग कैसी है, या 3 प्रोजेक्ट जिनने कंप्लीट करे हैं, आइदर 4 प्रोजेक्ट कंप्लीट करे, विथ इन टाइम पीरियड करा है या बोनस लिया है, तो
ओके।
शायद उनको कुछ रेटिंग बेटर देने वाले हैं और उनको कुछ उसका प्रेफरेंस मिलेगा। तो दे आर टेकिंग ऑल केयर, जो भी वो कर सकते हैं सर। तो
हम्म।
आई एम होपफुल कि सर इससे इंडस्ट्री को बेनिफिट मिलेगा सर।
Okay, understood, sir. So, what additional point you have highlighted is that the authority is also trying to introduce the performance rating for the
या
players, so that
यस
can help in giving preference to the good players having good execution track record.
जी सर।
That's the really useful. So my next connecting question is to Mr. Satyan. So as we discussed also in the presentation and we are discussing currently, so the bidding aggression was very high for last 3 years, and majority of these HAM projects, which is to be operational by FY 28, close to 1.5 lakh crore, they were at a minimum premium over NHI cost or at a discount. Also, the inflation indexation is lower and the bank rate is also declined. So, in this context, do you foresee any dip in the valuation multiple or slowdown in the monetization activity for the HAM projects?
Thanks, Malish. And a very good evening to all of you. This is a very interesting question, considering the fact that HAM projects earlier used to be bid above the bid cost. Now it is at par or below the bid cost. So obviously, if you look on to the monetization of the HAM project, or the valuation of HAM project, it's pre and the post. Earlier they used to get somewhere around 1.75 to 2x. Now they are on a downslide with respect to the valuation. But what does HAM project provides you? It provides you a very stable income. It provides a risk-free or other no linkages to the toll. You have to just do the O&M. So
Absolutely.
what type of platforms would like to have this? Obviously, InvITs comes on to a major player in buying these HAM assets. They would like to have their portfolio a certain portion which is far more stable and gives them an annuity type of cash flows. Further, if you look on to last 4-5 years, there are many new players who have bidded for these HAM projects, and they have developed these HAMs. These were earlier small EPC players, and they have become a developer now. And their main aspect, they have very limited equity, and they would like this equity to be churned out.
Yes.
Their main earning comes on to two aspects, smallish. The first is whatever the margin they make it in the EPC.
EPC.
The second comes on to with respect to early completion bonus, because they are very excellent developer. There are a lot of names that you may not be knowing. I'm not like to name it, but if you look on to, most of them get an early completion bonus. This is their earning. So even if they have a cut with respect to the valuation, they are very happy to get closer to the cash and sell it off to probable investors. So if you ask me, is it going to hamper the valuation? Yes. If we compare earlier with respect to today, there would be a small cut in the valuation. However, with so many InvITs coming on to and a platform which is a perpetual, where asset addition is going to be there, they are going to play a very important role in buying these assets. So in my opinion, definitely there is a huge market. Valuation may be less because of low inflation, because your revenue is linked to that, but it will churn the HAM assets in near future.
Understood. Understood. So broadly, what you are saying is that there may be some moderation in the valuation multiple, but the slowdown in the monetization activity is not expected because it's a win-win thing both for investor as
Absolutely,
well as the
absolutely,
developer perspective.
absolutely, absolutely.
Understood.
If you look onto the InvIT market, you have what roughly 2 lakh plus crores of asset under management with all the InvITs. Even we are coming with InvIT now in the near future.
Yeah.
For an InvIT, you will have like to have two types of assets in your portfolio. Obviously, a toll which will give you an upside and an annuity. Now the old annuities are no more out there. Most of them are either completed their tenure or they are on verge of completion of it. What comes on to is HAM. So obviously, it's a right mix for the annuity, for the InvIT to have a portfolio which is a mixture of toll as well as HAM.
Yeah, understood. Yeah. So thank you for this insight. So my next question to Mr. Gaurav on this quality related aspect and how to evaluate those while acquiring the assets. So heightened competition in the bidding and increased execution challenge has also resulted into the perceived risk of the quality of the construction. So as an investor, how do you foresee this risk? And what are the mitigations while acquiring such HAM assets? Gaurav?
Yeah, first of all, thanks, Molesh, for inviting me to this webinar. And I would like to congratulate Setu and Sakina for a great presentation. In terms of acquisition philosophy, I think a lot of panelists here have already highlighted it. If you look at the earlier set of HAM assets that were monetized, right, they had something going for them. And I'm drawing some of the pointers from your presentation, right? There was a 30% premium on the BPC that NHAI had put out. The PIM, the inflation numbers were higher. Therefore, the BPC got corrected to a higher number. There was low leverage, which I think over a period has increased. So the premiums that developers got in the range of 1.75x to 2x on their assets, right, was something that was happening till the first set of monetization happened. Now, if you see the BPC, there's a discount of 15% on the numbers that NHAI puts out as a cost for projects. And this has been a gradual transition from a premium of 30% to negative of 15% that we have seen, right? We have seen the decline in rates that have happened. And therefore, the correction in BPC, the inflation numbers have been very low. Therefore, the correction in BPC is not very high. And the leverage levels have gone up, right? And what Mr. Satyan was also highlighting, this has led to a lot of pressure on the developers in terms of completing projects and seeking the right value.
Understood.
Now, I think somewhere with the exercises that the various developers are taking in terms of monetizing their assets, they also understand that there will be pressure on the multiples that they will get, probably a shave off of capital also. And I'm not going into the aspect of the proportion of EPC that they bill as part of the total BPC, right? That itself creates a discount on the value. So if they have 75% of the BPC being EPC, then there are chances of they getting premium on equity. So in terms of the steps that we take, firstly, identify great developers who have a philosophy of good quality, a very strong due diligence philosophy internally, where we, apart from other facets, a very strong diligence on the project, where we are looking for partners more than just a buyer seller kind of relationship. Strong DLP terms, etc., that we kind of build in so that we travel with the developer for some time before we completely take over the asset. I think these are the three strong things that are the philosophies that we follow when we look at assets. But just to put things in perspective, right? Like Mr. Satyan was also saying, right? Today, InvITs are 7 lakh crore assets under management by the time we end this financial year, right? Half of it is roads. So 3.5 lakh crore will be roads, right? And we are talking of 2 lakh crores, and I'm taking this input from your presentation as well. 50,000 already ready for monetization. 1.5 lakh crore will be ready in the next 2 years, right? So we're talking in the next 2 years, 2 lakh crores of assets being available for monetization. That is close to 80% of what the InvITs have achieved in the last 8 years. I'm talking road InvITs, right?
Yeah.
So there is a lot of supply that is going to be available for the InvITs for monetization. And what monetization means is the churn of capital for the developers as well, so that they can execute and take up more projects, right? I would also like to highlight that there are certain good things that have happened, right, which we should not miss out. Though the award has been close to 50% in the last 2 years of the targets that were set out, and this is as per MORT, the
Yeah.
execution levels have been phenomenal, right? We have achieved close to 98% of targets that were set out for execution, and an average for 5 years being 31 kilometers per day, right? Which is phenomenal. 5-year average at the numbers, not moving too much away from 31, is a phenomenal, achievement. So overall, if you ask me, with the philosophy that investors have today, and these have now evolved over a period of time, have become very robust. The kind of supply that is available, I think it augurs very well for the sector as a whole. And with the monetization pipeline for the next 4 years, right? First, it was 1.6 trillion rupees. Now it's more than double at 3.5 trillion rupees, right? I think it augurs very well for the sector, and NHAI looking at more InvITs and other means to monetize assets, right? I think it augurs overall for the community, it augurs very well.
Understood. Well said, Mr. Gaurav. So what you are saying is that there is enough supply available for the monetization, and broadly you are looking at the quality of the asset, quality of the developer, and third, the defect liability period to take care of any exigencies while selecting these projects.
And I would just want to highlight one more point, Molesh. This is only NHAI that we have spoken about, right?
Yeah.
We have seen that there are additional allocation by state governments for roads, right? More than the center. And this will add to the kitty that I just spoke about, right? So the numbers we are talking are in isolation for national highways related alone.
Yeah, understood. Yeah. We have discussed about the national highways because largely those national highway assets currently have transferred to the InvIT. Yeah, but moving to the next topic of the, as you also mentioned, Gaurav has also mentioned that there is a lot of awarding from the states. So moving to the next topic, let me begin with Mr. Garg. So capital outlay in the states have witnessed a healthy CAGR of a 15% over FY21 to FY25. And this trend is expected to continue in the medium term over next 2 years. So how is your experience as a developer in working with different state projects in terms of A, project execution, and B, release of payments? Garg sir. Yes, sir.
स्टेट प्रोजेक्ट में मेजर प्रॉब्लम सर यही है कि वहां पेमेंट्स की कोई श्योरिटी नहीं है सर. स्टेट के प्रोजेक्ट्स तो अच्छे हैं सर, कंपेयरली कुछ स्टेटों में तो कंपटीशन भी कम है इन कंपेयर टू नेशनल हाईवे. बट स्टेट हाईवे में, स्टेट प्रोजेक्ट में सबसे बड़ी प्रॉब्लम यही है कि सर पेमेंट की कोई कंफर्ट नहीं है सर. जैसे अभी हमारे भी कई सारे प्रोजेक्ट कंप्लीटेड हैं, बट एनयूटी का कोई टाइम पे पेमेंट्स थोड़ा कम ज्यादा होता रहता है सर. उसमें थोड़ा ये इशू आता है सर. अच्छा, नेशनल हाईवे और स्टेट में थोड़ा सा यही अंतर है सर, बस मेनली जो अंतर है.
ओके, और एग्जीक्यूशन एंगल से बोथ आर सेम, स्टेट और सेंटर?
मोर आर लेस सर. स्टेट हाईवे जो मोर जो जितने भी स्टेट बना रहे हैं सर, वो नॉर्मली उनके स्पेसिफिकेशन जो हैं वो थोड़े पुअर होते हैं सर, क्योंकि वो नॉर्मली हमने भी देखे हैं. और जो रहे हैं वो तो ऑलमोस्ट नेशनल हाईवे के स्टैंडर्ड की बना रहे हैं. जी,
अंडरस्टूड सर. एंड सर मेजर कौन सा स्टेट से अभी पाइपलाइन है और वहाँ पर काउंटर पार्टी भी
सर अभी महाराष्ट्र में काफी प्रोजेक्ट आ रहे हैं सर, हैम के.
ओके.
सेम थिंग कर्नाटक में अभी काफी हैं सर. आंध्रा में
Okay.
है। इन
Okay.
3 स्टेट्स में तो वी आर बिडिंग कर रहे हैं सर हम लोग। जी
Okay, okay, yeah. So your response is also echoes with our presentation, wherein we have mentioned about the counterparty risk. So my connecting question is to Rao sir on the impact on the operational and financial performance of road developers. Mainly, two aspect. One, the as you also mentioned earlier, the players have moved into the sectors other than roads, like transmission, airports, and railways. And second, also in the state projects they have participated, so wherein there is a counterparty risk and the working capital cycle for the road developers have increased by 50 days as mentioned in the presentation. So what's your take on this with respect to the managing working capital cycle and counterparty related risk? And
Right.
second question is the what are the mitigations to address these issues?
Because, see, thank you. It's very pertinent. Our experience with the state government, we have executed major projects for the two states, one for Uttar Pradesh and another for the Maharashtra. So in UP, I'll tell you the experience because we almost participated in two of their major thing, that is Agra Lucknow Expressway. Another is Lucknow to Ghajipur, that Purvanchal Expressway.
Mm-hmm.
Both these expressways with a very huge capital outlay successfully completed, and in all the packages where we completed ahead of schedule, ranging from 80 days, 75 days, and 60 days ahead of schedule, and we earned the early
कल
completion.
सवेरे ले लेना, वो गीता भवन या कहीं मिल जाएंगे।
See, state government, as far as Uttar Pradesh is concerned, they funded through budgetary allocation. So there were absolutely no issue with the release of payments. As far as Agra Lucknow Expressway, Purvanchal Expressway, Gorakhpur Link Expressway, and another is the Bundelkhand Expressway. All these four expressways, state government has provided funds through budgetary allocation. Very seamlessly, they made the payments without any kind of a thing, with a very low working capital cycles, and successfully executed, commissioned, and all these projects are under operation. They're collecting toll. Of course, they're collecting toll through a third-party toll collection agencies. I would definitely, I would agree, because the amount of money they spend, the amount of toll revenue they're getting is very low. Because since it's funded by state governments, okay, otherwise no debt taken, and some of the think they have taken debt from the banks. When it comes to Ganga Expressway, they realized, okay, there is no, the funds which are available with the state government to allocate as a budgetary allocation, they are not infinite, they are finite. So Ganga Expressway, they modeled it on a BOT toll projects, where this 504 packages of 500 plus kilometer from Meerut to Allahabad, comprising four package, three Adani is executing, and one package IRB is executing. Okay,
Yes, sir.
so Ganga Expressway, they are also going to, I think, next few months, they are going to commission. And of course, there is no other than grant, 40% or 39 or 40% grant they given, that is the state outflow, remaining 60% funded by the projects. So that is concern, I am telling UP is concerned. There is one advantage with the state, land being the state subject. See, whereas in NHA always, any central government, they struggle for the land acquisition, whereas if it is a state project, the such struggle is not there, because it's their own this thing, their own domain. Even at UPEDA, Uttar Pradesh, just Expressway Industrial Development Authority, UPEDA, they used to have a 80 to 100 tahsildars and other people and SDMs kind of a thing at their disposal. They sit in their office and then they see the oversee the land acquisition. So they will do it very timely. They provide the land. There is no absolutely land issue. And if they have a budgetary allocation, so they can make the payments to the contractors. Second thing, when it comes to Maharashtra, see, Maharashtra also executed a major project under EPC, that is Samruddhi Mahamarg from
Yes.
Nagpur to Mumbai, 700 kilometers. Also, it's funded by state government through MSRDC. MSRDC, their nodal agency. See, where there again they had a issue with the funding, because such a 700-kilometer length of project they constructed. It's a huge cost of thing, land acquisition and other thing. So again they formed some SPV and they transferred the land to the SPV, and that SPV secured some funds from the banks and in front of a term loan, rupee term loan, kind of a thing that has happened. And again, subsequently, Maharashtra government has taken other EPC projects like Pune Ring Road and Jalna Nanded other thing. But again, they're struggling it because funding a EPC project, because they have to fund the EPC project, that kind of budgetary allocation should have. The government of Maharashtra should provide to them. So they're getting some kind of a liquidity imbalances and also money. So now slowly all these state governments are switching to ham mode or otherwise BOT toll. In case of BOT toll and ham, very typically two kind of things happen. If it is a BOT toll project, I would say there is no risk of getting money from the state government because I have to fund 100%. So I'll fund it. Only the risk that developers are taking is the traffic risk.
Yes.
Okay, later we construct a road and we have a 25 years of BOT concession period. I can recover my capital from the collection of toll. In case of toll, in the initial years, if the toll is if it's something like a greenfield expressway, there is no captive traffic over there, so it will slowly ramp up. Initially, you will have a difficulty in servicing the debt. So I may have to put additional equity to service the debt. That kind of a thing will happen. But at least there, what happens, there is no political kind of a risk.
Yes.
In case of HAM projects, what happens? HAM projects typically have a 15 years of payment for the annuity. See, what will happen if a HAM project of 2.5 to 3 years of construction and 15 years of operation period or concession period. So total project end to end is 18 years. At 18 years, there is possibility of 3 to 4 governments will change at the state level. So you have a political executives will change. So what will happen if my annuity, see, I have to, until unless we get our annuity regularly, would not be able to service our debt. So that there should be a guarantee to get the annuity regularly. Even though there is a change at a state level, the political changes happen at a state level. There is that in risk is there. So there is a risk of bankability also. Banks also not so comfortable with the funding the state annuity projects,
Yes.
particularly hybrid annuity. See what is happening now, each state wants to emulate the same model of a hybrid annuity, what NHAI and all have been doing successfully last 8 to 9 years. But the same thing for a state, it would be a challenge for us because we have to see that how I'll get the annuities over the next 15 years post completion regularly, even if there is a change in the government at the state level. So
Yes,
there is
sir.
a major risk at a state thing. So the bankability. So this issue, what happened in the last week of November, we had a pre-budgetary consultation meeting.
I think some network issues, Mr. Rao's end. Hello. I think some network issues. Yeah, so broadly, what Mr. Rao was highlighting is there are no major execution related hurdles they have faced in the state projects because it is backed by budgetary allocation. And second, the land acquisition is also the state's subject, so there could be good state support. But yes, for the release of annuities, there can be hurdles. And this also echoes with our experience in
Yes.
certain projects. Yeah, yes, sir. You are highlighting about the annuity delays and.
See, if government of India comes forward, say, okay, you execute the key infrastructure projects at a state level. If the state government fail to provide you the annuity, so we will pay you the annuity from the center, and then we'll recover from the state allocations, whatever the tax payments or anything and all. That will give a great comfort to the developers to execute it, and the projects will become more bankable.
Yeah, understood. So you are talking about the providing the guarantee from the sovereign for the
particularly a hybrid annuity model.
Yeah, in the HAM
In case of
project.
EPC projects, what will happen if state doesn't pay? We'll do 2-3 months. We'll execute the work. If state doesn't pay, then the contractor can't indefinitely put the money working capital out there, and then they'll stop the work. So EPC is not there, and the BOT toll has said the only risk is the traffic risk. It is not that whether state government will pay or not. It's only the traffic revenue. Only in case of HAM projects or where the annuity has to be paid for over a period of 15 years, there is a risk. There is a risk of change in political executives.
Absolutely, sir. So Mr. Rao has highlighted important point of providing some type of assurance of guarantee from the center for the state HAM projects to resurrect the investor appetite in the same.
Exactly.
So coming to
We
this correct.
formally submitted this suggestion as a part of pre-budget consultation. We submitted to the finance ministry.
Okay.
This
So
to
coming
give them so
to
that they
this
can
next
undertake
question.
more projects on a ham, and they can state government also can leverage their limited budgetary resources in a large, greater way to undertake more number of projects.
Understood, sir. Yeah. So coming to Mr. Satyan for his views on the similar thing, the partial guarantee, the partial credit enhancement, which is now a new emerging topic. So do you foresee any uptick in the investor appetite in this road projects, especially state projects, state HAM projects, due to launch of RBI's partial credit enhancement framework? And will that impact the monetization deal? Because people will able to raise the money, top up debt due to that.
Yes, Malish. In fact, partial credit enhancement is not a new thing. In fact, I think most of the people who are there present in this webinar, they may be remembering that way back 2011-12,
Yeah,
IFCL was the first institution who started PSG.
correct.
See, the main objective, RBI has been always trying to find a way to improve the bond market. I have been working onto this industry roughly for 2.5 decades. And I still remember this was a topic of discussion when I joined the industry, and it still is a topic of discussion after 25 years. Unfortunately, our bond market for infrastructure assets has not developed the way it should have been, considering the fact our appetite for the credit, our appetite, our infrastructure development. So there is always a big gap at the moment. Even IFCL, when it started in 2012, until it's roughly 13 years, I think they have not done more than 2,500 crores of total partial credit enhancement. And now recently, NAFED has come up with their policies in line with what RBI has stipulated. The basic thought process out here, if you look onto that particular scheme, is whom it's going to help. Whether there is a market for a double A or a A-rated bonds in the market at the moment or not, and at what pricing. So there is a market for a short-term or a medium-term AAA bonds, but is there a market for a double A bond? And if you go with a partial credit enhancement and you upgrade your triple B asset into a double A, what is the pricing that you are going to get it? And what type of takers are out there? We do have eminent personalities onto this. Unfortunately, the term loan rate of a double A would be more or less either equal or less than a double A bond at the moment of the same maturity. So the government has come on to. There are certain aspects that needs to be relooked onto. One of the aspects is definitely that the 30 days norms, if you look onto,
Yes.
because this implies that if the cash crunch continues for more than 30 days, your entire platform goes for a toss, or you have to infuse money to take care because your NPA norms will come on to. Number two, it has to be looked beyond to that. If you are in a double A category and if you want to move on to a triple A category, this is an excellent way to get it in a better form. But unfortunately, till date, neither IFCL nor NAFIT is propagating this particular scheme very much. They should look onto this, more advertisement, more offering, and still we have to find out what the cost of this particular instrument comes onto. So we have to explore. Plus, they have to look onto. The lenders have to look onto what type of pricing they comes onto for as a commission, as interest comes onto overall pricing comes onto. I think still a long way to go for this particular partial credit enhancement guarantee schemes that comes on. If you look onto international market, there is a huge market and it's a quite developed market. But unfortunately, in Indian domestic market, I think it's a long way to go for us.
Understood. So thank you for sharing this insight. So we will begin with the questions from the audience soon. So may I request the participant to key in their questions so we can take it. Before we take the audience questions, I will ask a couple of questions. So my next question is to Gaurav with respect to operational toll roads. So while the mature toll roads have witnessed this healthy traffic in the past and performance was stable. However, because of the construction of alternate routes like DME, Samruddhi Expressway, Amritsar Jamnagar, so and other roads by NHAI. So as an investor, how do you see these traffic diversion risk in the medium term? And what's your take on the realistic traffic growth on a long-term basis?
Thanks, Molesh. So I would like to highlight a few points. See, about a decade back, right? The plans that the government had in terms of expressways, was not very clear. But now I think their plans have been very clearly laid out, right? So when the analysis is done for projects, we try and build in the impacts of the existing expressways, of the upcoming expressways, and with whatever data that is available, though very little. Okay, that is one thing that probably can be improved. We have more data about the upcoming projects, land acquisition details, progress in terms of construction, etc., which is very limited. But with the available information, we try and build in scenarios on when this could be completed, etc., and what kind of impact it will have in terms of diversions onto these expressways. One more point I would like to highlight, initially we used to see trends, again, I'm talking about a decade back, right? A lot of the traffic being long distance traffic, right? There were corridors with 80-90% long distance traffic and very limited in terms of localized traffic, right?
Yeah.
What we've seen is also with the development that has happened over the last decade in terms of expressways and long corridors, right? Is that there's a lot of localized traffic impact that has improved or increased in these corridors, right? Which are much more easier to gauge. And with the kind of GDP projections we have nationally and some of the states that are developing, right? This portion of localized traffic itself has its own ecosystem and growth that is projected, right? So in terms of saying that there'll be a huge impact or there could be a considerable impact would probably not be a right statement, because we have now traveled the distance of analyzing network impacts and commodity impacts more minutely now, and therefore understand the impacts much better, I would say, than we used to understand earlier. And we have come to the understanding that these have to coexist, right? And therefore, when evaluating projects for value, we build these into our assumptions with various scenarios to arrive at the right value that we could give. How these will evolve over a period of time is still to be seen, right? Some of these are very new, some of these are still under construction. But I feel that to whatever extent data is available, analysis and the learnings that we've had over 1.5 decades of analyzing traffic, etc., we have seen that localized growth and the learnings being brought in, we are able to ascertain the right value for projects.
Okay, localized growth means you are saying passenger vehicle or both freight and passenger?
Both actually. What we've seen is that more localized consumption is something that has improved over a period of time, right? Earlier there was a lot of transit that used to happen. Now the local ecosystem itself is growing and providing the growth on traffic, right? A lot of these states are actually surpassing the national average of GDP, right? So they have seen that growth happening, and that itself is supporting the projects. Earlier, everything was benchmarked to the national GDP. Now, with the inherent growth of states coming through, right, some of the compensation for this division to expressways, etc., is compensated. That's the point I'm trying to highlight.
Understood. Yeah. So thank you for sharing this insight. So before we begin the questions from the audience, so my last question is to both Mr. Rao and Mr. Garg. Quickly on a 2, 3 broad expectations that you have from budget or from the regulator to improve this investor appetite and execution hurdles in the sector. So in a 2 or 3 main things. Can we start, Mr.
Yeah, yeah,
Mr. Rao?
yeah, thank you. Regarding actually, I have not mentioned about the monetization because recently we monetized some of our assets, ham assets that's there in the public domain. See what happens. There is appetite for the monetization. Certainly, there is appetite. There are a lot of investors because they are forming the InvITs and all. But even as a developer, see, we are also getting a good kind of a valuation because of the see the ratio between BPC and EPC. What Mr. Gaurav has said. If it is that ratio is less, so there is a enough room is there to make the money during the operation period. And also quality of education. What will happen if you have a better quality of education? They do a very thorough due diligence, technical and engineering due diligence. If they find the asset is okay, the quality of asset is good, certainly the maintenance cost would be lesser over the period of this thing. Certainly, then there will be enhancement in the valuation. So valuation is not the issue. See what happened as a developer, we primarily go for a monetization of our assets to recycle our equity. So okay, we can recycle, we bid for more number of projects. But for that to happen, we need to have a horizon for the investment. See, I can't just monetize my asset and keep my bank in a fixed deposit or a term deposit. See, I need to put so there should be a robust pipeline of projects. There is a fund-based projects, that too, not fund EPC kind of thing, the fund-based, either HAM or a BOT toll and all, so that I can put gainfully, productively, I can input my whatever money I realize through my monetization, my equity plus my this thing. That is one thing I want to say. So monetization, yes, there is appetite, there is some people are there, the thing, and there's a set up project, but only thing the developers will monetize only then they find a good opportunity cost. That is one thing, just I want to share. Second thing, as you said, what we are expecting. One is that if the state governments across the country, if they want to go for some kind of a fund-based projects and an annuity model, we need some kind of a counter guarantee from the government of India. That is one thing we already formally we requested the finance ministry. And the second thing is that treat construction sector also something like a priority sector and give some concessional income tax. See,
Okay.
no, that is the thing. Corporate tax should be can compared to other these things. It should be also something where specialized in manufacturing or anything you treat it and you reduce the corporate tax so that the investment, more kind of a thing. Modernization of equipment. See, what will happen if you modernize your equipment or state of the art equipment, you bring it to a construction that definitely needs some capital expenditure and also will increase the cost of construction. For that, certainly some incentive should be there. Otherwise, see, if X and Y two contractors are there, one contractor is using some manual and very dated kind of equipment, and somebody is using the very state-of-the-art modern equipment, certainly cost would be more. So that kind of incentive and with kind of a increased depreciation, accelerated depreciation for such kind of equipment that we want it. And second thing is the counter guarantee for the HAM kind of project for a state government. So that
Understood, sir.
this is what we are expecting from the
Okay.
government of India.
Yeah. Rajesh ji, broadly, आपसे 2-3 points. What can you expect from authority or government? Mute परो सर आप. म्यूट परो राजेश जी. हाँ.
सर, जैसा राव साहब ने बोला सर, मेरा भी ओपिनियन यही है सर कि स्टेट के प्रोजेक्ट में कहीं ना कहीं कोई काउंटर गारंटी होना चाहिए सर, सेंट्रल गवर्नमेंट की। अभी कुछ प्रोजेक्टों में सर उनने एलसी भी दिया हुआ है, बट उसके बाद भी कहीं ना कहीं प्रॉब्लम आती है सर, गवर्नमेंट चेंज हो जाती है तो गवर्नमेंट रिवॉल्विंग एलसी है, उसके बाद भी प्रॉब्लम आ रही है सर। अच्छा, स्टेट में वही सबसे बड़ी प्रॉब्लम जो राव साहब ने बताया सर कि 15 साल और 3 साल 18 साल का स्पान होता है सर। गवर्नमेंट चेंज हो जाती है, सिनेरियो पूरा बदल जाता है सर। वो उसका बेबी समझ के दूसरे का बोलता है तो मेरा एडॉप्टेड बेबी है, मेरा कोई लेना देना नहीं है इससे, तो वी विल फेस द प्रॉब्लम सर।
ओके.
तो वी नीड इम्प्रूवमेंट फ्रॉम सेंट्रल गवर्नमेंट कि वो कुछ हेल्प करे सर इसमें।
Understood, sir.
अदरवाइज आरबीआई टेक एनी फैसिलिटी कि कोई हमको उसमें कोई प्रोटेक्शन मिले।
Okay, understood,
जी
sir.
सर।
Got it. So now we will take the questions from the audience. So there is one question on the visibility of the new toll projects. So with respect to pipeline, so can anybody answer? Mr. Rao, can you answer any about the pipeline of toll projects under the new revised MCA? What is the
See,
pipeline?
as I said, the revised MCA, they have not finalized. So they had two rounds of discussions with all of the potential
With
developers.
respect to toll.
Yeah, with respect to toll, the NHAI had a discussions, two rounds of discussions. Now they're having their internal discussions before finalizing the MCA for the BOT toll projects. As of now, NHAI has launched 5 BOT toll projects, one in two in Andhra Pradesh and three in Maharashtra. So Nasik to Khed, Nasik Fata in Pune to Khed towards Nasik. Two projects. One is another is a greenfield project, Pagod to Chowk, which will capture the traffic that is going to JNPT port, and two projects. One project in Telangana and one project in Andhra Pradesh. These are the 5 projects they announced it. See what again I said. In case of a greenfield project, so the greenfield project, if 4-lane project is there, existing traffic is there, and a 4-lane project is moving, NHA wants to expand it to 6-lane project through a BOT toll. There is a captive traffic is there because the traffic is already moving. We know what is the traffic on the 4-lane mode. Until unless there is some competing road, this traffic will be there. Will have a sustained traffic, and with the widening from 4-lane to 6-lane, that the capacity will increase, and there will be some generation of traffic. The risk is less. When it comes to a greenfield expressway or highway, where they want to go for a BOT, there is a higher risk is involved. Because what are the factors that it is a one is that meeting the demand, another is in the creating the demand. In case of a greenfield, some existing the traffic which is moving on the existing road network has to come to this greenfield until unless there is a reduction in time and the reduction in cost and all, they will see the thing. So when then only that's the thing. As of now, NHA bid out 5 projects which are in bidding, but bidding will happen only once the MCA is finalized. So they put some comforts they given in case of any decline in the initial years, they will provide some revenue grant. In case of a decline in the thing, revenue grant they will give. In case if that toll is not coming and it is falling beyond the target traffic, there is a buyback provision they are introduced, and so many things, new things they have introduced. So to protect the interest of the developers, let us see. These 5 projects are there on the horizon. So how the things will unfold until the new MCA is released by them. So then it will happen. But we expect all these 5 projects will be bid out before the end of this current financial year.
Okay, understood. Great, sir.
Maulish, I'll just quickly highlight, right? If you
Yeah.
look at the trend also, right, over the last 4 or 5 years, NHAI still a large part of their awards, in one of the reports, it says close to 80% or so is still in the EPC mode, right? And the balance gets awarded in the form of HAM or toll or TOT, right? And over the last 2-3 years, if you see, there is a gradual phasing out of TOT in terms of the awards, the ticket size, and the push has been towards InvIT because it's an immediate monetization and a platform that could, in the future, also provide monetization. And we see the signal of, from NHA of getting Rajmark, which will provide another platform, public InvIT, which will provide a large scale monetization potential for NHA. So somewhere I believe that the push from NHAI towards BOT toll has not been that strong. They are more comfortable with HAM, and the success of HAM has given them that comfort. InvITs have given them that comfort. So I think the modes that they will look at is probably EPC, InvITs, and then HAM is what my sense is from what I've seen.
Understood. Yeah. So EPC and HAM so that they can transfer those HAM asset to InvIT as well, their own InvIT. Understood. Yeah. So my next question is to Mr. Satyan. So it's a connecting question. So what will be the impact of Rajmarg InvIT in the monetization market of the private players?
So, Malesh, in fact, Rajmarg InvIT plays a very important role, specifically for deleveraging the balance sheet of NHI. Uh, if you look on to currently, there are two ways of demonetizing the NHI balance sheet. Obviously, TOT is one of them. Unfortunately, it's roughly about 8 years since the first TOT has come on to. 18 bid has come, and I think only their success rate has been 45-50 odd percent. TOT 2, 4, 6, 8, 10, all, even last 17 or 16, all of them has been cancelled. The basic reason has been that the developer or the bidders have been not able to match the ICV as expected by the NHI. Unfortunately, except the first two, NHI never declared their bid price, the floor bid price. So there is a complete opaqueness from NHI with respect to their expectations. However, they have been again come up with TOT 19, 20, and 21. 19 is supposed to be bidded. I think the bid date is on 29th of this month. And 20 and 21 is expected by February. In my opinion, as a bit different from what the panelists said, I think NHI would continue with this TOT model in near future. Always trying to get discover the price of this assets from the market, and if it doesn't matches its, then it would silently goes into their own InvIT. This is what has happened if you look onto last 4-5 TOTs which has been cancelled. So they will, I think TOT has been more used like a discovery of the pricing for them rather than anything else. But in my opinion, they would continue. But yeah, whether it goes to the private players or not, there is a question mark at the moment.
Understood. Yeah.
I will just add to Mr. Satyan's point.
Yeah.
That the monetization target for the next 4 years is right double of what we have achieved, and we only achieved 73% in the last 4 years, right? So there was still we couldn't meet the target of 1.6 trillion that we had set for the roads. So there is enough monetization potential that is there, and NHAI being a repository of the largest centralized road network, right, national. So that will not actually change the availability or the pipeline for private investors, right? And we discussed that 2 lakh crores of HAM alone will be released in the market, which is 80% of what last 8-9 years of InvITs have achieved, right?
Yeah.
Which is a lot, and this is coming in 2 years. So in terms of the InvIT community or the investor community, I think there is enough pipeline. In terms of Rajmarg InvIT, creating a competition, I think the focus or the objectives of that InvIT are completely different. It's reaching out to public at large and probably creating a large investor base, right? So I think we are all taken care. I think there is enough for everybody to have.
Yeah, understood. Yeah, so I think these are the broad questions from the audience. So I think we have had a very interesting session today, and more importantly, we have gotten clear answers from all the industry experts. And we all agree that although there is a strong pipeline for monetization, however, there is a need to improve the pace of award and tackle the execution woes. And as also mentioned by Mr. Rao, there is a need to provide some credit enhancement to the state annuity projects to revive the interest in the state PPP projects. So that's very insightful. So thank you once again, Mr. Gaurav, Rajesh ji, Mr. Satyan, and Rao sir for sharing your deep insights and patiently answering all the queries that participant had. I am privileged to host you all in today's session. Thank you. Thank you all the participants for joining the session today. Thank you very much.
Thank you.
So
Thank you for
we shall
kind
now
invite.
hand over the session to
I'm
Mamta.
really
Pleasure.
enlightened by the co-panelists. their expert views and all. So,
Thanks all of you, sir.
Thank you. Same
thanks,
here.
thanks, thanks.
Handing over to Mamta for closing remarks.
Thank you, Molesh, for moderating the session. Once again, we thank all our guest speakers for their insightful views. It was a privilege to host you. And lastly, thank you to all the participants for taking the time out and being a part of the CareEdge webinar. For any further queries, feedback, or suggestions, please write to us on the feedback mail. Goodbye for now. Requesting the tech team to kindly log off.
Thank you. Thank you.
Thank you.